1st, final calendar day of July. And we just came off a very significant week. A lot going on, as I mentioned last week. We had the GDP print, Q2 GDP, which is probably, you could say, the most significant because, as I mentioned, it would likely confirm a technical definition of a recession, which it did. And we had a negative print from the previous year, going quarter over quarter to get two consecutive quarters of negative GDP, confirming we are in a recession. In addition to that, we had FOMC on Wednesday, in which the Fed chose to continue with their 75-point hike, also which we predicted the previous week, which is, in my opinion, very bullish because, as I mentioned over the past few weeks, the Fed continuing to hike up interest rates is a positive thing for the market because they are tackling inflation, and they've clearly chosen to focus on inflationary pressures rather than all the other economic indicators of prices and whatnot. And with this, it's a very positive effect because they are focusing on inflation with the rate hikes. And now that we are in a confirmed recession as a result of Thursday's GDP print, we will see what the Fed will do. But what I anticipate, as I've mentioned the past few weeks, is the Fed will begin to slow down. With Powell's comments throughout the past few FOMCs over the past few months, he has mentioned that he will be doing the majority of the work within this year, and more so sooner than later. So I think what is most likely to happen is we get, if anything, a another smaller rate hike, and the rate hikes start to diminish, and then we either stay constant or we begin lowering once inflation shows that it is declining. And I think the following CPIs to come will begin to gradually move lower and lower, as I believe that we've reached a peak inflation, or we are reaching a peak inflation, and we will begin to draw down from there in regards to inflation. So CPI will note that, and as that is occurring, the Fed will see that, and the Fed can point to that, those CPI prints, stating that inflation is coming down and there is no longer need for rate hikes. And then one other thing that's significant about that as well is that if you look at where we are right now, it's pretty interesting because it's a lot like 2018 right now, where in 2018 we had the same scenario where we were entering confirmed recession. This was under Trump, and Powell was still Fed chair, of course, and at that time the rates were exactly the same, coincidentally, right? We were leaning into 2.2525, if I remember correctly, and at the time we were entering confirmed recessionary period, based on economic prints, economic factors, GDP. And what occurred is that Trump mentioned to Powell at that time, we're not entering a recession. Like, you have to do something. And what he did there is similar to what we're seeing here, but he pretty much tackled in with regards to rates. And then what happened is we had a pretty much a complete 180 reversal. So rates started going down. Uh, that's not the best thing for the long term because, as you saw, 2019 preceded that year, and what we saw in 2019 was rapid growth, which is good for market participants, but in reality, for the long term, it's not good because we had to get to a rate of normalcy, which I've been mentioning, and I think we're getting to a little bit of normalcy now because the extreme volatility, 30% on SPY year over year, 50% on SPY year over year, it's not normal, right? And it's not sustainable. So you have to have sustained economic growth. If you want accelerated economic growth, it has to be slightly accelerated, and you have to reach a beta with the index, and when that occurs, you have well performing companies exceeding the market average, and low performing companies well underperforming, and you have an average coming to the index on a weighted average, right? So I think it's pretty interesting because it looks like it's coming to the exact same pivot point, but which is a good thing because in 2018 I think what was done was good, but it was they didn't need to bring rates too low, because that's what kind of I think pushed market to kind of rally more exponentially than is healthy for the market. And yeah, but what the Fed would need to do here, I think, is that they would need to be careful, not raising too high more than that's needed, because if we see inflation coming down, but rates continue to rise, and they possibly rise too fast, then we enter what's an extreme recession, right? Whereas in 2018, what we saw is we entered, we kind of dipped into a recession, but we didn't actually have the following effects of the recession, right? Where which was what was positive, and what you know came out of it. So I think that's the only thing the Fed needs to sort of watch out for, is not continuing to raise rates too high while inflation is actually coming down and prices are coming down. Um, but I think the Fed will do the right thing. I think they're at least in the short term right now, for the past few months, they've been acting in the best course of action, because where they were at the point, again, I mentioned this a few months ago, but it was a lose-lose situation, and they chose to tackle inflation, raise rates, and not worry about any other sort of economic indicator, and a recession, and they've done so, and it's worked effectively. And it looks like inflation is coming down, and I think that's a positive thing. And if they are smart over the next few months, I think they will begin to ease off and stop rate hikes, and you'll see inflation coming down, and they can point to that as their effectiveness, then their success in lowering inflation, and then from there, market balances itself, and we continue higher. And I think with that, if the Fed continues to act effectively in the projections that I've just mentioned, I think that the lows we saw in 1 month ago are likely. It's a good chance, I'd say about 60 to 70%, that the bottoms were in, and those are the bottoms. But we'll see where we go, in the month to come, and how the Fed continues to act going forward. But over the past month, we played it really perfectly. Selling out early year, and as I mentioned, this 1 month ago, I was telling everyone, buy, 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 and it's worked very great. Uh, the large allocation stocks I've mentioned, Tesla, Zoom, Shopify, Google, all up, 30-40% from the lows. Really good. And yeah, we've profited greatly on those, and I think it's great. And I think there's continuing to be a lot of opportunities. In the very short term, though, my thoughts are that, which I wanted to mention as well. In the very short term, I think, in the next week, I think we're coming to a great time to actually short, in the very short term, because I think what you're seeing now, and I follow sentiment a lot, and it's a great gauge. And to prove that is 1 month ago, when I was telling everyone buy, 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 these are like crazy prices. Tesla 600, 640. It's like it's just a no-brainer, right? Earnings were amazing. Um, One thing about Tesla is I'll cover this later, but they're just the best company to buy in this sort of economic period, and I'll cover that later. But Zoom, Google, you're looking at the lowest PE ratio I've seen, and compared to their PEG, their growth, and I mean, Google, another company that's great in this economic period. Mountains of cash. They're printing money, zero debt. They're pretty much a monopoly. They have pricing power, right? And these companies coming down like crazy. Google had the split, also even a more bullish event. And when I was telling everyone to buy 1 month ago, we were at the exact lows, and majority of the market, 99%, were literally selling. It was capitulation. They were selling, and they were selling the bottoms, right? And I think that was majority retail, where the sentiment was, extreme fear. We're headed to a recession where, we're headed down the drain. And, I was telling everyone buy. And now I think what we're seeing 1 month later, we're up, another, 15%, 20% on the index, whatever it is. Um, and now I think you're seeing a lot of FOMO. And I think what we saw this past Thursday and Friday, so the latter half of the week, which we also played really perfectly, shorting into the Monday, Tuesday, and then longing in the latter half of the week, as it was likely, everything was priced in, which was true. We rallied on the inflation print, which some perceive as negative. But as I mentioned, for the reasons in the beginning of the live session, it's very positive, these rate hikes, because it is tackling inflation directly, which is the Fed's goal, right? So they're accomplishing their goals. And then GDP print, again, printing, recession print, negative GDP year over year, two consecutive quarters negative GDP, confirming we're in a recession. But again, it's not something that not everyone knows already, right? And it was pretty much an opposite, sell the news. It was a buy the news, and we rallied. And I think a lot of it is a bit of a short squeeze, as well as combined with, I think, FOMO buying. It's a good gauge of sentiment, to look at retail, which is the majority of the market. And when you look at that, I think where a lot of people are right now, and I mentioned it by posting a few of these sort of Reddit posts and stuff of people, saying, "Oh man, I sold everything. 1 month ago, I listened to all these people on YouTube, these big hedge funds, whatever, and they were saying that." Now is not the time to be investing, hold cash, whatever, sell. And they're saying now they're feeling FOMO. And I think what you're seeing is a lot of FOMO in the market, where these individuals who sold out, let's say a month ago at the lows, which is majority of people, they are now feeling FOMO as we see, the market sort of rallying, going, uh, show goes on back to normal. And I think you're seeing a lot of FOMO, and I think we saw that Thursday and Friday as well, where we're rallying quite a bit. You see that a bit on Tesla as well, as Tesla is just pretty much a ramp up. We got positive 6% on Friday, uh, largely because of the news of the EV credits coming out from the new bill from Democrats. So that benefits Tesla a lot, but I wouldn't attribute 6% to it. I'd attribute maybe a 1% move to it, and I'd attribute the other 5% to individuals having to cover shorts, so short covering as well as FOMO buying, both combined between the two. And I think you're seeing again a lot of FOMO, and I think what we'll see is a continued move. I'm going to be watching next week, but this week to come, but um, I think you'll see continued sort of FOMO buying from retail, and it'll push prices up more. And then I think just in the very short term, I'm not talking, medium term or whatnot, just very short term, for a trade, I think it's a good opportunity to be short, as I think we'll get, some pullback on all this FOMO buying, and then we'll continue upwards as usual. But yeah, just wanted to mention that. Again, I've I've mentioned this to couple members, and I think I mentioned in the live session. But just again to touch on what I was saying, with Tesla before. But when you really think about it, right, what's pretty interesting is in a recessionary period and inflationary time. um, it's the businesses with debt that have the highest liability in this time, right? But when you look at companies like like a Tesla or a Google, who have very little debt, they're not impacted by you know rate hikes because they're not servicing debt, right? So they're not impacted by rate hikes. In addition to that, is that when you have these recessionary times or inflationary times, it affects demand, right? But in the case of something like Tesla, the demand always exceeds the supply, right? So you're always at a demand surplus, even if demand were to fall by 50%, right? Tesla still does not have enough supply to fulfill demand. And they will not, even in 2 years, they will not have enough supply to fulfill demand. So Tesla is a unique company where they're always demand constrained, right? And in that aspect, when a company like Walmart, right, is, as they said in their last earnings call this past week, right, they're saying we're seeing a reduced demand, so we have to lower prices, right? Tesla's in the opposite direction, where even if they see a reduced demand, which Elon mentioned on the earnings call, but he's not seeing it, right? But even if they were to see a reduced demand, their supply cannot even fulfill the current demand. So they're always going to be supply constrained. So they're not affected by reduced demand. They'd actually enjoy it because the wait times will come down, right? And how they've dealt with the wait times currently is they've raised prices, right? And then how they've also dealt with inflation with regards to commodities or raw materials is they've also raised the prices. So they have pricing power to the fullest extent because of the fact that they're not affected by demand, right? So that's one of the companies that's completely not affected in a time like this. But then obviously you have to factor in, there's an alpha beta with correlating to the macro market. But as you saw, this past week, it's a great example of even on Friday, some companies kind of printing down, going in the red, but Tesla's going crazy up 6%. And that's, you could see the alpha of Tesla stock in comparison, where it's becoming uncorrelated for that day to the macro market. Um, so yeah, just my thoughts there in regards to that. And yeah, just wanted to kind of touch on that. Going into the week, we have some earnings coming up, so I'll post that in the chat. But yeah, I think we've performed extremely well. We've really played the market perfectly. Also in regards to earnings, some of the rationale this week, in regards to earnings, we had some crazy big earnings, and again, I think in this market, the solid companies printing solid numbers, and solid growth numbers will continue to perform well on earnings, and you'll see companies like Roku that are the opposite, not printing well. And it also has to do with valuation, which I think people aren't looking at. So I mean, like for example, a Google, right? Google cannot go any lower, really, in regards to when you look at an aspect of PE and you're looking at the valuation of Google, right? So that's why I was so confident, in a Google earnings. Same with Shopify, right? When you're looking at the valuation standpoint with regards to the amount of profit growth year over year, they're looking at, they can't really drop any lower, right? And you're looking at clear bottom prices in a lot of these companies. And again, we saw with Shopify, a boom on earnings. Same thing, Tesla, doing the same on earnings. And Yeah, I think again, not everyone is focusing on these valuations, and I think that's the exact thing you should be focusing on, which is why the companies we've picked have performed extremely well, and are up significant amount from the bottoms, whereas other companies are quite lagging as well, or performing extremely poorly on earnings, following their earnings reports. So yeah, this upcoming week we have some Fed speakers speaking as well throughout the week. So I'll post that schedule as well in the chat for everyone. But yeah, other than that, that's my thoughts on my end.